This is Scott Becker with the Becker Private Equity and Business Podcast. We come to you regular short business episodes, short private equity episodes, interviews with business and private equity leaders, and then, somewhat irreverent body of life episodes. That's not today. Today's discussion is three signs the apocalypse is upon us, part two. So here are the three signs today that even though there's pretty signs in the economy, at the end of the day, long term, there's probably some real trouble to be had. First, the national debt hit 35 trillion. You're hearing more and more voices say that this is a problem. The people you're not hearing say are politicians trying to run for re-election that are scared to either cut spending or increase taxes. So you're not hearing them say it. The rest of the world, anybody who's a real economist understands that the national debt now hitting 35 trillion is a real problem. Second is, notwithstanding the juicing of debt and the deficit spending, job openings are back to about 8 million from a high of about 12, 13 million a couple of years ago. That means the labor market's getting tighter. It also means the quit rate, the rate at which people quit jobs, is slowing because people are scared they can't find another job. So you've got a quit rate going down, job openings down as well. 8 million is a relatively low number for a country of 330 million people. So that's the second thing. The third thing is we're caught in the spot. The stock market's down another 1% today, where you're caught in this very delicate spot between potential recession and slowing down of the economy. And Procter & Gamble also fell 6% today, and Procter & Gamble's important because it's a bellwether type stock. But the point being, you're caught in this very difficult spot between the economy getting tighter and inflation still being a little bit higher than the Fed wants it, and trying to figure out what the Fed is going to do. Usually what we've seen over the last couple of years, bad news in the economy, debt too high, job openings declining, led to some optimism in the stock market, because then the Fed might choose the stock market with reduced interest rates. Now you're seeing a situation where the Fed's getting there, but at the same time, it may not be enough because people are so concerned about recession in the economy in the long run. Those are the three signs the apocalypse is on us, part two. Thank you for listening to the Becker Private Equity and Business Podcast. We hope you enjoy this. Always feel free to text Scott Becker 773-766-5322. And love to hear your ideas for topics, your thoughts, and more. Thank you so much for listening to the Becker Private Equity and Business Podcast. Thank you.